All right, guys, so I'm going to show you exactly how I trade US30 on a day-to-day basis, showing you exactly how I mark it up, and if we have any trades I'm going to execute as well. So let's go ahead and get some lights on in here. Bam, and let's get right into it. All right, guys, so check it out here. This is exactly what I do every single day coming to the markets before I execute a trade on US30, okay? So we're gonna run through every last one of these from 1 through 4, and then again, if any of these actually end up playing out, we'll go ahead and execute and show you a full fucking day of US30. So very first one is, where is price going or reacting off of, okay? So that is specified for the 4 hour and 1 hour time frame, okay? So let's go ahead and delete everything off of here. Okay, so very first thing we want to do is establish, is price making lower highs and lower lows, or is it making higher highs and higher lows? Because that's going to give us a bias as to where we believe price is going to go for the rest of the week by looking at the 4 hour time frame. Not that we won't take buys if we get some type of buy scenario setups on lower time frames, but just having an overview idea of where price is probably going to go. Which in this instance, you know, if you're ever confused about trend, making sure you're going back to left until things make sense, as this is a clear push up, a clear pullback, a clear push up, and a clear break of that higher low sitting right here. So what does that mean to me? Well, that means the price is bearish. That means that we have an impulsive leg that's sitting right here, meaning we're creating lower highs and lower lows. And in that formula, we're going to more often than not be looking for sells as far as the bigger picture. Okay. Going to hourly time frame, looking for the same exact thing. Is price making lower highs and lower lows, or higher highs and higher lows? It's the same exact impulsive leg. We have this lower high up here and this lower low down here. Now, yeah, since we've created that range, we've had just a pretty ugly retracement here of price pushing up and potentially trapping buyers, whatever. But as you can start to see here, as we're breaking structure already, price is on higher time frames bear, so kind of holding that bias. Okay, so very next thing on our list is marking out our support and resistance on 4 hour, 1 hour, 30 minute, and 15 minute. So when we're looking at support and resistance, we want to see 3 or more taps that has in the past shown that these levels are of support or resistance they're actually holding. Okay, so we got a very clean, and when I say reactions, I mean big reactions from these zones, especially when you're on higher time frames. You know, when price comes up to this area, what is the type of reaction you're getting off it? It should be either one of two things if it's a prevalent area. One, when price comes up to it, it reacts away from it very quick. Or two, if price wants to break above that level, it takes a lot of volume to break above that level. Okay. And again, just when it comes back to it, what is the reaction you're getting off of this level is going to show you if that's correct support resistance. All right. As far as anything else, I don't see much. I mean, we have this guy sitting all the way down here. Okay. How do we know it's prevalent? Because when price reacts off of it, I mean, that's a bit far away. We have a good reaction from it. Not once here, not twice here, but 3 times from this point as well. Okay. And so that's 4 hour time frame. Now going down to 1 hour time frame. Is there anything on 1 hour that we can see that's close to price? Or can we tighten up the zone that we currently have? Yeah, we can kind of tighten up price to where we're currently at. Okay. As far as hourly time frame goes, I don't see much. I mean, we kind of have this one forming here, but it's not much of a prevalent area, at least on hourly time frame. Okay. Once you come up to it, getting a good reaction, or it takes a lot of volume to break above this level. But every time you come back to it, getting a reaction. It takes a lot of volume to break below it here. But once you come back to it, you're getting a reaction. That's why it's showing that it's a valid area of support resistance. Okay. So going down to 30-minute time frame, seeing if we can tighten up any of these lines or continue forward. I don't see much as far as 30-minute time frame. I mean, it could be argued this guy is sitting down here. We already got 2 taps. Third tap here or so. I mean, we did break past it and didn't really hold when we came back up to it. But obviously, this area here had a good reaction away, and this area here had a good reaction away. So something to kind of look at. And then 15-minute time frame. Don't see much at all. So what do we have going on now? And let me grab that guy back over here again. Okay, so now first, number one, we've already decided that price is bearish, so we're more so looking for sells. And then number two, we've marked out all of our support resistance coming all the way down to 15-minute time frame. Okay, still having that bias of wanting to take sells. And so going down to number three, trend lines, previous session highs and lows. Let's go ahead and mark that up. All my analysis as far as my trades go, we'll keep this with us. You know, I'll mess with it later on, copy it, whatever. Um, My whole analysis is based off of previous session highs or lows because I'm a liquidity trader. I understand that during previous session, all sellers from London, their stop loss is probably sitting at London highs more often than not at that swing point, and all London buyers, anywhere they got into buys here from this point, they're probably putting it at the most obvious place, which is at swing points, highs and lows, and previous session highs and lows, okay? Which is probably sitting somewhere right here. And so, my liquidity trading, I always want to see somebody else's stop loss be removed before I take my position. That's kind of the whole ideology behind that, of why I like previous session highs and lows. Just like right now, look what's happening. We've taken out these previous session highs right here, which I'll zoom in so you can see. This is a previous session London high right here. Look what happened. We took it out, taking out all the sellers that were sitting up here, selling off price right here. And then now price is pushing in their direction because price more often than not is fucking bearish, right? It's fucking sending it right now. Okay, so we have previous high marked out, we have previous low marked out, previous high is already getting obliterated from this point, and then any type of trend line. So trend lines are always going to go from one lower high to the next lower high. Here's a lower high here, here's a lower high here, and extend it to the future. Never never fitting your trend line to where price is at. So same thing right here. We have a lower high here, we have a lower high right here, you know? And then push it to the future. Not really a prevalent trend line that's telling us much of shit at all. It's not telling us anything. But never ever fit your trend line to price. So we have a high right here, and then fitting it down here just because it looks better for you. Is not going to help you within trading. We don't want it to look better for your eyes. We want it to actually be prevalent areas where we're getting reactions from. So if there's no trend line, when you go from lower high to lower high, or higher low to higher low, then that's just simply not a trend line. Okay. And then going down to 5 minute time frame, looking for support and resistance. So down here, oh, we've barely broken above London high. Pretty much created just the equal top sitting right there. So coming down to 5 minute time frame now, I only choose support and resistance that has at least two or more candles of a retracement. Okay. So this candle right here, all three of these candles, this retracement candle, this green candle, because it's going the opposite end of trend, is not a valid retracement to me because it's not at least two or more candles. Same with this candle here, same with this candle here, but up here, now this is a valid retracement where I'd put my high at. Well, why is that? Well, I don't want to trade based off of 5 minute areas that are not prevalent on 15-minute time frame. It's too minor of areas, and that's why I like that two candle structure when marking up support and resistance because it's on 15 and 5 minute time frame. Okay? And so we have our highs sitting up here and we have our lows sitting down here. So for in this instance, I do not lose money the same way I make money in the markets. I know I talk to you guys about it all the time, but I still want to run through this. So if price were to break below these lows right here, I'm not going to take that sell off, even though we're bearish, even though we're looking for sales mainly right now, because we have London lows sitting down here. So for all the buyers in London session, their stop loss is probably sitting right here. And so what usually happens within the markets during these points is price comes down, it takes them out, and then potentially continues higher. Okay? Liquid grabbing all of these early buyers. But if price were to come down, take out their stop losses, and then re-break a newfound low sitting right down here all day. This is our bread and butter setup. I would absolutely be taking this trade for the next sell-off. And so that's what we're waiting for right now. Let me take this off. Let me take this off so we understand exactly what we're waiting for. We're waiting for a grab of these lows, the same exact thing we took on Friday. And then a push back within the range, and then a push back below. And then two things can happen from this point. We're either going to take that re-break back above these highs here for a buy back up, as long as we have a one-to-one coming to our next resistance, which we do, just indicating that this is a liquid grab setup that's going to play out. Or number two, which is obviously our more exciting option because we're trading with trend, is we'll go ahead and take this next sell off below this next newfound support. And we'll sell down to our next area sitting down here. Okay. Anywhere from a 25 to 50 point stop loss, depending on how much volume is within the markets. And then trading somewhere down to this next level where price could potentially react off of. So as we wait, we'll keep this up. And this is kind of my full bias of what I do every single day. Marking up those support and resistance lines, marking up any type of trend lines that are potentially in our way, and most importantly, trying to figure out where price is currently going or currently reacting off of. Okay, so currently right now we're reacting off of this resistance sitting up here. Okay, very prevalent resistance on the 4-hour resistance, and until we get some type of reaction here, we'll still be bearish once we tap into this area down here, but understanding that we're probably going to get some reaction because the past predicts the future. In the past, every time we tap into this area, we get a reaction. So it's just something to look for. Okay. But let's see how this lines up. All right, so you guys watch me every single day as to how I trade, risk management, psychology, teaching my group, all of the bits and pieces of how I'm trading profitably on a daily basis. Now, if you're tired of getting the bits and pieces and you want the entire puzzle, you need personalized mentorship. I am offering 25% off of my mentorship until January 1st. And there's two things. One, I have never done this discount before just because I value my time and I want to make sure you guys value yours as well. But number two, prices are going up in January as I do the first of every single year. So this is by far the cheapest price you will ever get it at. So make sure you guys execute. The link is down in the description to see if you qualify. I do not work with everybody just because I give a lot of myself and my team's time towards each individual client. And so I want to make sure you're somebody who can actually produce results from this program, and obviously somebody that would merge well with myself and my team. So if you would like to see if you qualify, link down in the description. Let's get right back into these charts. Look at what's happening here, man. We have not only pushed below London lows and never came back, we have not only pushed below the support here and never gave any retracement. We have sent price 430 points since London High is sitting up here. Okay, so I always tell my group, and a good teaching for you group or thing for you guys as well. If anything is beyond a 200 point range before session open, the move has already happened for me before session open itself. So I'm just going to wait till the next day. I can push that a little bit, because sometimes there's areas where there's a lot more volume within the markets in a normal day. And so, 400 point range is more like a 100, 200 point range, just depending on how much volume is in the market at that current moment. That's why I have a variable stop loss, either 25 points or 50 points based upon volume. But something like this, bro, even when you put up our position of using a 25 point stop loss, obviously we usually go for a 1 to 2, and then 1 to 3 we pull out in full. Look how tight that is, for an actual stop loss. Even to come down to lows here is a 1 to 3. Just because there's so much volume within the market. So giving a full breakdown, obviously we do expect price to continue lower. We're very bearish in higher time frames. We started to get a bit of a retracement now. And as long as we're sitting underneath this 42,750 level, we're selling off all day long, whether that's waiting up here for some type of range to form and then a break below that range, or just even a simple break below where price is currently at, just riding the wave. But today it's just going to be a no trade day. Too much volume within the markets. We got session open in about 10 minutes. But in a nutshell, that is completely how I trade US30. Running through those 4 steps every single day, waiting for that setup. Once it presents itself, great. If it doesn't, not forcing any type of trades. But the biggest part of this video I want you guys to understand is looking at where price is currently reacting off of. Okay, if you can merge that confluence, the price is currently reacting off of resistance, so a bearish drop lower, and those higher time frames being bearish as we're making lower highs and lower lows, and then going to lower time frames and only taking breaks below some type of support, you are going to be golden as far as upping your win percentage. It's really just as simple as understanding the mechanics behind riding the wave. It is not your job to decide where price is going to bottom out at, where price is going to top out at. It is your job to follow along with where price is already going, which in this instance is bearish. So hope you guys learned a lot. If you did, please make sure you like, comment, subscribe. I am uploading literally daily for you guys at this point, trying to give you as much value as I possibly can. And when you subscribe and when you like, that shows me that you guys are enjoying the material that's being put out and you're learning something. So let me know down below how you guys feel about this video, and I'll see you guys for the next one.